back. Microphone. Good. All right. We should all be back now. Yeah, that should be all a lot better now.
Yep. And we're back on YouTube.
We're back on YouTube?
Yep.
Okay, cool. Cool. Excellent. Sorry about that, folks. But at least everything's working now, and hopefully I don't have to go anywhere for. So yeah, this is the SPY right here. So I need to share my screen. I am sharing my screen.
Yep.
So this right here, as this goes lower, we want to find stocks that are underperforming. Underperforming. Very, very, very important. So for that, it's so much easier to use this right here. So for that, we want to find stocks making lows right now. So let's look at stocks making lows. Marvell is making a low. That's a very nice stock right now. By the way, he took that trade that I gave on SG, Matt.
Nice.
Marvell.
Can't say I'm surprised.
I'm not surprised. I like the stock SG still. It's on my list. What else I like? I do this pretty quickly as I've done this a few times before. I like Steve Matson. I'm adding that to my list. Westcott, WSC. Adding that to my list too. So we're almost done with our watch list. See if there's anything on the 50-day low that we want to look at. Yeah, we already have Amazon. Oracle, that Oracle. CRM we already have on our list. Pins. Southwest Airline, we already have that on my list. TVX. I will, Adam. I will. I'll go through them first. Zeta. All right. So let's go. And by the way, look at the SPY. Look at the pullback the SPY has had today. This is it. Gap down, going down, and look at the pullback it's had. Not really. Yes, there is, Mike. There is. It's in the A-line members area. Yeah. All right.
Thanks, Penny. That's a good idea.
What did Penny say?
Post on Telegram that we're still here.
That's what I was telling you, Matt. Post on Telegram that we're still here. Yeah, let them know. Are we back on YouTube?
Yep.
Okay. Good. All right. Oh, another one. YM. Yeah, this one. Let's see. All right. I'm doing well, Art. Thank you. Go ahead and rejoin, folks. Go ahead and rejoin. So we have a lot of stocks. And also, by the way, I wanted to point out something to you. For the first time in about a week, look at the number of stocks on our short list. The number is over 100. We haven't seen that in about a week. So we do have some downside momentum. We do have some downside pressure. There's absolutely no question about that right now. Okay? No question about that right now. Now, upside, as I mentioned, nothing. Kroger, that's it. Well, markets are crashing due to tariffs. There's nothing crashing, but what I don't like about the market, and I pointed this out earlier today, what I don't like about the market is the fact that the bond market is dropping. It's up down a full basis point. It's not good, and it's below the VWAP. It's very, very bad. And also, look at VIX. VIX is at 34. It's coming up here. Not coming down, coming up. This is not good for the market, folks. Not good for the market at all. Hoping that some news comes out next couple of days that will shake this up. But for right now, this is not good at all. Um, Walmart, let's take a look. Walmart. Not doing anything. Just choppy. Chopping around the moving average right here. Not really doing anything. It's respecting the 8-day. It's doing a lot better than most stocks. Same thing with this stock right here, Moss. Not doing well, but still above the 200-day moving average. All right, let's look at these stocks. Let's look at them individually. Why we like them, why we don't like them, which ones we can include, which ones we can exclude. So this one's moving along with the market, but it's breaking the low. It's got earnings in a couple of days. Not a good swing trade. Okay. Yeah, BJ's. Let's look at BJ's. Yeah, BJ's is weak today too. Everything's weak today. CVX. Earnings in a few days. We still have a little time. By the way, notice we're breaking down this area here, and we're below the VWAP all day today. $25 days down. Too expensive. Do a spread. Buy the 135 and sell the 133. Do this for $1 or less. Okay. Amazon earnings in a week. Not enough time. Love earnings 3 days. Not enough time. Zeta. Look how weak the stock is. Got a little bit of time. 73 Delta. You're not paying that much premium here. Look, you're only paying about 40 cents premium here above intrinsic value. 1250 put. No buyers. And also remember something else, folks. It's a quiet market. Volume is lower than usual today. We're only at 22 million contracts. Not a lot. That's right, Penny. A lot of stocks have earnings. That's right. SG. This was actually my favorite stock this morning. Earnings are not for a while. 20 put. Very nice. Marvell, one of the weakest chip stocks. Earnings, plenty of time. I like what I'm seeing here. You're only paying 70 cents for outside of intrinsic value for premium. It's not that bad. 52 right here. Most of this is intrinsic value. Spreads are good too, by the way. Shoe, Steve Matson. How long have I been telling you about this stock and shoe stocks for? 2 weeks now? 3 weeks? 70 Delta, 2250 put, right? Right there. WSC. Right here, 81 Delta. There are not that many buyers right now. Right here, you're paying almost nothing. It's almost all intrinsic value right here. YMC. Talk about weakness. Talk about weakness, right? Earnings coming up soon, but got a few days left. Right here, 45. 45 put. Now, you might have noticed that over the past 3 weeks, I've been giving folks, except for the pit, I've been and the trading zone, we've been giving almost hardly any trades. Do you now understand? A lot of you didn't understand why. Now, do you understand why? Do you see how the market is just doing this right now? Just below the 200-day moving average. Very difficult right now. Zeta. I think I already talked about Zeta, but Zeta. 25 days to go, 73 Delta, 1250 puts. Good, Chris. Good. Now, long, we got long KR, and it's overextended right now from the 8 day. So we wouldn't do anything. Thank you, C. Marvel. Marvel was the 25 days out. I would do a spread on Marvel. Yeah, I would do a spread. I would buy the 51 put and sell the 49 put for a dollar. Snap, let's look at Snap. No, it looks about as weak as the SPY. I want it to be even weaker. Even weaker. Doesn't look bad. This one looks like the SPY. KJD. I don't know. You want something that looks weaker than the SPY, if you can even find that. Now, folks, you've got to be really, 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 really cautious right now. Okay? Uh, and you need to be buying options that are as close to the money as you can because implied volatility is still high and it's only going higher right now. So you got to be really cautious there. Now, my suggestion would be don't try to chase this market. Wait for us to go to the VWAP today if you want to short. The only way I would consider going long today is if we breach the VWAP and we started going into the gap, assuming we had some strong stocks like maybe Netflix. But I wouldn't be holding my breath. CRM, I'm still bearish on CRM. I gave you guys a swing trade target, and that's like on CRM, that's right around here. Right there, about 230. I told you that last week. We got about a profit target about 230 there. We may be able to exit pit trade today. Maybe. I don't know how it's doing. Let's take a look. I don't know about that. I want to see this thing go right here to about 12. Disney, let's look at Disney. No. Disney actually is stronger than the SPY right now. Look at Disney and look at the SPY. Doesn't the SPY look weaker to you? See, David, the SPY looks weaker. We don't want it. Can you add SPY on top of any trade to see the trades lower than SPY? Sure you can, Michael, but there's a better way. Let me show you. It's a little trick I picked up about it 17 months ago. It's called the Pro Trader Dashboard. If this is green, it's stronger than the SPY. If this is red, it's weaker than the SPY. What do I need to put it on? I have it right here in front of my face. QQQ and SMH are both stronger than the SPY for the last hour and a half, 2 hours. Look. There you go. See, I got it in real time. Don't even need to review it there. Yeah, SLBK took a dump. Volume is very low. Don't think it's going to do much today. All right. Yeah, if you don't have the Pro Trader dashboard, yes, it's a good way to do it. Definitely a good way to do it. All right. Now, I wanted to talk. What it is that I wanted to talk about today? I want to talk about something important today. Oh, yes. I want to teach you guys something important today. I have a lot of monitors to keep up with, yes. But I wanted to teach you guys something important today. So, I know how to teach you this. I know how to teach you this. When you guys see a gap, do you think there's a higher probability that price action will go into the gap? Or do you think there's a higher probability that price action will stay away from the gap? What do you think? Chris says into the gap. Into the gap. Well, I hate to say that most of the people who says fill into the gap, which is about 70 or 80%, you're all wrong. Let me show you. I'm going to teach it to you backwards. I'm going to teach it to you backwards. No, Cyrus, it actually doesn't depend on the market. Let me show you. It depends on something else. Can somebody tell me what these white color lines identify? Why are these white? See, me telling you that you're wrong isn't going to change your mind. Me explaining to you why you're wrong is going to make you change your mind. It's a high volume candle. That's right. Greater volume. That's right. That's exactly right. So let's take a quick look here at Microsoft, for example. So here we have a gap, right? We have a gap. And, well, how about this? Here, we have a gap down all the way here, right? Gaps. There's gaps here, right? What usually happens? What usually causes gaps? Can somebody tell me? I'm not going to give you a trick question here. What usually coincides with gaps? News, news, some event, something. You're all good. No, no, don't. News can be earnings. Now here we go. Bad news overnight. Why does it have to be bad news, Greg? Can it be good news? Santiago, Greg, what if it's a gap up? Just stop. We already got people being right. You don't need to be wrong. We already have people. A gap can be up, and then all of you are wrong who are selling sellers. So stop it with the sellers. It has nothing to do with buyers or sellers. A gap can go up and a gap can go down. I didn't say which way it's going. So stop it with the sellers. Stop it. Abdul, if you don't know what a gap is, you need to go to a different program and look it up and then come back here. So let's say you have a gap up like this, not a gap down. Or let's say you have a gap down. I didn't really ask you if it's good or bad. I just asked you what causes gaps. I am very, very particular in how I'm asking my questions. And those that are saying it's going down are not listening to what I'm saying right now. I never said anything about up gap or down gap. Just like when I talked about E-minis, I never talked about options, but most of you think I'm talking about options for some reason, even though I never mentioned them. Listen, open your ears and listen. I said, what happens when there's a gap? I didn't say gap up or a gap down. So stop changing the narrative on me, okay? So, a gap, usually when you have a gap, you have some sort of a news event. It's synonymous with news. Otherwise, why would you have a gap? Right? Right. You don't just have gaps. You have something that causes gaps. News, like 3/4 of you said here, news, and it has nothing to do with up market, down market, bearish market, bullish market. Just some catalyst, major news. Yes, that's it. Not market sentiment, just news. It's an external event. Exactly. Something happens to the sector, a news event comes out, a report comes out, Trump says something. I don't know. But a gap is when you have an undue pressure of buyers versus sellers or sellers versus buyers. And again, I'm not talking about direction. So get that direction thing out of your head. So let me ask you an interesting question. If you have a news event and you have a gap, what usually comes with that? Again, forget direction. What usually happens when you have a gap and you have a news event? What happens? Volume. Thank you. No, volume. With volume comes volatility. Stick to the basics here. Folks, I am not trying to trick you. You're tricking yourself. Just volume, higher volume. So, can I say the following? A gap is produced by something unexpected. And usually when you have a gap and you have news that's unexpected, you have higher than usual volume on the stock that day. Is that a fair assessment? Notice I didn't say anything about direction. Does anybody want to disagree with what I just said? Okay, good. Let's see. Very typical. Does anybody disagree? And I'm not saying anything crazy here. I shouldn't be winding anybody up here. Gap, something unforeseeable, news event, earnings, upgrade, downgrade, something unforeseeable happened, causes a gap, right? And usually when you have a gap, you have higher than usual volume. Okay, so we're all on the same page. Now let's take it one step further. Do I not, when we have higher volume, we just said when we have gaps, we have higher than normal volume. So when you have higher than normal volume, What happens to these bars? What color did they turn? Not a trick question. Not a trick question. What color did they turn? White. So it's fair to say that when we had this gap, this earnings gap here, that volume is high, it's going to be a white bar. Folks, I'm not trying to trick you, and I'm not trying to confuse you. You're doing a great job of that yourself if you can't follow along with what I'm saying right now. I haven't given you anything wild or crazy here. It's coming. It's coming. I'm going to punch you hard with it, but you got to be ready for it. So, see this white line? See how you had earnings right here? See how you had a gap on Microsoft? No, this is just TC2000, Michael. Stick with the topic. See, you have a gap. You have high volume, earnings. Anything that's above here highlights in white. Okay. So let's now go back to what I said before. I want to just make sure everybody's aligned on the same page because I'm about to pull a fast one on you, but I want to make sure you guys see it coming a mile away. So gaps are caused by news events. Yes, yes, whichever they may be. They may go up, they may go down, which we don't know and we don't care. We know that gaps come with high volume because when you have a news event, you have undue pressure of buyers versus seller, which is what causes the gap, which means you have a huge volume. Look, volume, gap. Here's a gap, nice fat gap. You have volume, right? Right. Now, what do I tell you we use these lines for? Forget about everything I just said right now. Forget about everything I talked to you about gaps now. I'm pulling a fast one on you right now. I'm pulling a big fast one on you right now. I'm pulling the carpet underneath you right now. What do I say we use these lines? Why do I have these lines for? What do we have these lines for, these white lines for? What do I use them for? You've asked me a million times. Roger, why do you have these white lines? Well, it's because we have high volume. But what do you use them for? What do I use them for? What type of pivots? What type of pivots? What type of outer limits? What's another way of saying pivots, outer limits? What's another way of saying pivots and outer limits? How about support resistance levels? Turning points. How about support and resistance levels? Isn't it the same thing? Turning points, outer limits, pivots, outer limits, turning points. Support and resistance levels. How about support and resistance levels? Does that work? So I could draw actual support and resistance levels that make sense. Is anybody still not understanding where I'm going with this? So, if we all agree that gaps are high volume lines and high volume lines make the best support and resistance areas, then are gaps areas that are easy to get through or gaps areas of very difficult to get through? Ah, who moved my cheese? What's going on here? You tricked me. I didn't mean to agree to that. A little different than what we all said about 20 minutes ago. Aha, look at Donald. I love pulling fast ones on you guys. Did anybody not understand what I just said? I just did a nice round turn with you, and you all said yes to something you said no to about 20 minutes ago, and you actually understood why. Oh, I love it. I'm going to run through it a couple of more times, but does anybody not understand what I just did? Oh, we'll get to a summary a few times, Hannah. But did you guys not understand what I just did? I asked you a question. 75% of you said no. Then after I went through it step by step, all of you said yes. But you don't even know what you said yes to, but you've all agreed with me. I'd be a pretty good lawyer. You know that, Matt?
Yeah.
All right. It was a tricky question. I love it. Okay, so let's do this. Let's do this exercise again. But this time I'm not going to tell you. I'm going to draw you to the conclusion yourself. How do we start all this with? Can somebody say how do we start all this with? What was the original question that I asked you about gaps? What was the original question that I asked you? If you don't remember the original question, this isn't going to be very helpful to you. And remember, I'm here to confuse you as much as possible so that you guys can think about all this stuff and clarify it. No, I didn't ask you what causes gaps. No, 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 no. I didn't ask you that at all. Something started this discussion. Nope. What did I ask you before what causes gaps? Yes, Harold. Yes. No, Bob and Harold got it right, but nobody else did. Harold, read what Harold just said. I asked you if price is easily moved away or towards the gap, and 75% of you said yes. Does anybody want to revise that answer now based on what I taught you? That you've all agreed on with the entire process? Most importantly, you understand why gaps don't get filled very easily. Does anybody totally confused right now, like having one of those, what the hell is going on moments? It's called cognitive dissonance, if you're interested in what it is. So, this discussion started with this discussion started with this. I asked you a question. Does price easily fill the gap, or does gap ask, or does gap or do gaps act as a major resistance support level? And three-quarters of you said gaps, price goes towards gaps, price gets filled by gaps. Does anybody want to, Ken, eventually, eventually everything gets filled. Nope. See, you're not answering the question. The question we're answering is exactly what Harold and Bob wrote. I'm going to repost what they just wrote. This is the question that you guys got wrong. This is the question I asked you and you guys got it wrong. Not half of you got it wrong. 2/3 of you got it wrong. That was the question that I asked. I hope so, Arturo. I hope so. That's a good place to be right now because I'm about to explain it again to you. No, a gap is a resistance area that stays resistant because you have high volume bars going with gaps like this, like this. Ah, all right. So let me now explain it to you guys since you guys don't like my rhetoric method. Does anybody not understand, or does most of you understand? I just want to give me a signal. Do most of you understand? Yay or nay? Chris is lost. Bob is yes. We got yes, yes. Abdul is lost. Lydia gets it. Carlos says no, yes, lost. Okay. Okay. Lost. All right, all right. So I'll explain it. At least something I can explain to you guys today. Do you see a gap right here? So how did this conversation start? I asked you a very simple question. Is it easy for a gap to get filled or not? Does price goes towards the gap or pow, gets slapped away by the gap? 2/3 of you says price welcomes gaps. Gaps, price likes to get filled. It acts like a magnet. That was the answer that most of you said. And I said, you're dead wrong. And then I proceeded to explain to you that gaps are high volume bars, and high volume bars act, which are white here, act as a point of support or resistance. That price bounces away from them, not goes towards them. But I explained this to you in two different ways. First, I asked you for the question, and then I asked you a series of questions that confirmed exactly what I said, but I didn't give you the conclusion. I wanted you to come to the conclusion yourself. Gaps are high volume bars. High volume bars don't get filled. They act as an area of support or resistance. This is the only purpose I use them for. So to you, you may think because you read a book and the book says gaps get filled, but think about how much volume went into creating this gap. There's a huge area of support here that of resistance here, excuse me, that is going to be very difficult for this thing to get filled. Brendan, most gaps, 90% of gaps will have a white bar in the end. My experience is gaps get filled in time. Of course they get filled in time. A year, 2 years, 3 months. My point in explaining this to you is a lot of you read stupid books that say gaps look like entries. They're perfect entries because gaps get filled. I'm here to tell you that gaps don't get filled that easily. Gaps create high volume bars. High volume bars create points of resistance and support for us, which means that gaps are not easily filled. They're very difficult to fill. And you need price to move well into the gap and create a new area of pricing area before it's filled. Otherwise, the price will not get filled. So everything you guys have read is completely the opposite of what really happens in life. Adam, this whole thing with 76% of gaps get filled. Yes, but what if it takes 5 years for the gap to get filled? See, I know it's worth the time of admission. I'm trying to teach you guys one of the most important concepts in technical analysis, but it's very hard. You guys just don't want to hear it. Well, you see, Cheryl, if I just told you as a fact what it is, you wouldn't believe me. But I wanted you to understand why. A gap is a high volume bar. A high volume bar acts as a pivot. A pivot is an area of support or resistance. It's not an area that's easily filled. It's an area where price is looking to break down from. Okay? So this whole thing, gaps get filled, though, so it doesn't mean anything. All gaps will get filled. Eventually, everything will get filled. Price will even if something went from $5 to 10,000, eventually it'll get filled. That doesn't mean anything. So what I'm teaching you is very, very important. I'm teaching you the opposite of the way you thought the market worked, and I've only spent 45 minutes teaching it to you. But more importantly, I've explained to you why. Gaps are accompanied by high volume. Gaps usually create high volume bars. High volume bars, do you know why they're white here? So I can identify them as a point of support and resistance. When this gap was created, look, let me go to a different chart. Maybe it'll be easier for you to see. My name is not Kane, but thank you, Cyrus. But I will be doing a webinar with Kane in about 10 minutes. And I'd like for you all to be there. So look, let me show you this. Look, we have a gap here, right? We have a gap right here, right? A nice big fat gap. I asked you in the beginning of this class, is it easy for gaps to get filled or not? 2/3 of you said yes. And I'm here to tell you, no, 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 no. High volume bars create pivots. Pivots are very hard to get filled. Look what happened when price went down and came back here. Do you see it getting filled? Respect your gaps. Draw high volume bars. Identify them and draw areas of support and resistance like I do. And you will be much further ahead of the market. And forget the stupid saying that gaps get filled because they're very hard to fill in a very short term. The structure of the market has to change for a gap to get filled because a gap is accompanied with high volume, and usually they are, means that you're going to draw an area of resistance here. So if I'm going to draw a resistance here, how easy is it for it to get filled? It's not. Gaps are high volume bars. High volume bars act as areas of support and resistance. So that book that you read about gaps getting filled, wipe your butt with it. Does anybody have any questions? And I hope most of you had a huge aha moment because I just explained to you in English why most of those books are completely wrong. A lot, Wes. A lot.
You have some questions on YouTube. Did you see them?
Oh, no, I have. Let me go to YouTube. I'll
They might be old. I haven't been looking.
Let me go to YouTube. I'll answer them. No, I didn't go today because we didn't have the internet on and I was discombobulated. Let me go to YouTube. Let's go to YouTube. What causes a gap? It could usually just a surprise, something surprise that wasn't expected in the market, which will cause high volume. What signs tell us if we were strong enough to fill the gap? Unless the gap is being filled, it's not strong enough to fill the gap. You should never, ever, ever play the gap is going to get filled game. No, you should play the gap is not going to get filled game. A gap creates a very strong resistance area right here. And what happens when I draw a resistance area here? It's not easy to fill. If I'm not going to, I think I've explained it enough, folks. Gaps don't get filled that easily. Gaps act as an area of support and resistance. They're areas that price bounces off. This chart doesn't prove anything. I just gave you one example. You would have to look at least 2,000 of them, which I have. But think about why I draw. Just ask yourself, why does Roger? Remember, you've asked me many, many times before, nothing to do with gaps. You've asked me before, Roger, what are these white lines on your charts? And I explained to you, I draw these white lines when we have high volume bars. Well, have you ever seen a gap without a high volume bar? I haven't. So that means this becomes an area of support and this becomes an area of resistance. Well, doesn't this too? Right here, that's that same chart you're seeing on Microsoft right here. See, right there, there's a resistance area right there. And what happened? Price came back up here and here to that resistance area and backed away. So, folks, do gaps get filled easily? I'm going to ask you the same question that I asked you about it 50 minutes ago. Do gaps get filled easily or not? Hey, Carla. Carla says, how does your gap program work if gaps don't get filled? By waiting for the gap to start getting filled. I knew you were going to ask me that, Carla. I knew you were going to ask me that. I knew you were going to ask me that. So obviously, Carla, I figured out a way around it, right? We wait for the gap to start getting filled, nicely getting filled. Rejection of the gap on the VIX tells us nothing. You're combining volatility with gaps, Travis. You're taking two concepts that are completely unrelated to each other, and you're trying to combine them together. That's confusing in the best case scenario, Travis. Carla, that's why I said we wait till the gap nicely gets started getting filled. When the gap starts getting filled, that means price is telling the gap to go take a hike.
There's a gap on the VIX. Typically, it's just because the news that the market was reacting to happened after hours.
Yes. All right.
Wouldn't read into it much past that.
So what was this? Who's retracting their first answer? Chris says, I would like to retract my first answer at this time. Good. Good. Yes. Do you use Fibonacci to decide when the fill is nice? Christopher, the only thing I use Fibonacci is entertaining reading on the weekends. When I'm reading some stories about traders who are busting out. That's the only Fibonacci that I've ever personally used. That's my personal experience with Fibonacci. I'm telling you my personal experience with Fibonacci. Okay? So, when you see gaps, don't think gaps get filled that easily, because they don't. Because gaps are high volume bars, and high volume bars act as points of support and resistance, which is the only reason why I have them here. If they weren't important, I wouldn't be drawing them on my charts. All right? Now, what I gave you right now is pure gold. Not only did I give you some stupid fact, I explained to you in English why. And if you don't believe what I just said, ask yourself, when was the last time you saw a gap that wasn't a high volume bar? Because high volume bars are points of support and resistance. That's the only reason why I have them on my chart. So this, my friend, becomes a strong area of resistance and support. I changed your outlook on gaps. You're welcome. Adam, because now you understand why. I didn't just tell you gaps don't get filled. That wouldn't mean anything. I explained to you why. Why. That's the key. Because gaps are high volume bars. Duh. High volume bars, folks, are the best points of support and resistance. That's the only reason I have them here. All right. I'll see you. Matt's going to post a link. And hopefully we'll have a lot of people in that class. And you may want to rewatch this class I just gave 5 to 10 times if it hasn't sunk in. Because you may disagree with what I said, but you will not disagree with why I said it. All right? Very, very important. Not something you're going to get from a beginner's class in technical analysis. By the way, what I just explained to you, it only took me 20 years to figure it out myself. Yes, it took me 20 years to figure it out myself by using my brain. All right. I'll see you guys later. You have that link, Matt?
Yeah, I've been
Posted
posting
it?
it. Yep, I'm
All right.
posting it.
I'll see you guys later. So don't think gaps are easily filled. No, they're quite opposite. They act as an area of resistance. Price imbalance. Bye, guys.
Bye, everyone.
Good session. Great
Here's
session.
the
I
link
love
again.
when people understand things.